Hello everybody, I hope you guys are having a fantastic day. In today's video, I do want to cover HIM's stock. I haven't covered HIM's stock in quite a while. It's not because I have any less conviction. I didn't sell any of my shares, and I'm actually planning to build on my portfolio position when it comes to HIMS. I've been saying this for quite a while that I was waiting for HIMS to go under $8, but I have the ability to wait because I already have a sizable position for HIMS. And although I haven't covered it in a little while, I'm one of the few YouTubers, not the only one. There is just a very small community of people covering HIMS. So today is my pleasure that I'm going to update you on HIMS. Also, the reason why I'm making this video on top of just wanting to make the video is because I was requested to make this video by 2 channel members. You see I have channel membership down below. If you guys want to buy me a cup of coffee, it's $3 a month, and that pays for my coffee, which gives me energy to be able to make videos like this and give you guys content. So if you guys are making any really cool educational plays, anything, coming from my end, and you appreciate it, please support the channel, support your local YouTubers at $3 a month. Besides for this video, I will be doing a separate video only for my channel members where I will be sharing an options play coming up for earnings. Right or wrong, I'm not a financial advisor, nor do I want to be a financial advisor, nor am I qualified to be a financial advisor. Everything is purely entertainment and educational purposes. However, HIMS has been doing really, really bad. As the market is going up, HIMS is going down. However, as the market was going down, HIMS was going up. It has this adverse reaction to the rest of the market, and I don't understand why, but I caught this around a year ago. Back in 2022, HIMS was pretty much the only stock that was going up. Now, as I said over and over again, if the footings, the foundations, the guts, the fundamentals of the project, of the stock, of the company did not go away, did not go down, and the stock is down, is that a buying opportunity or an opportunity to leave? For me, it is a buying opportunity. But I've been buying HIMS since $3, and I'm still up triple digits on over 100% on my HIMS investment, and so are a lot of people on this channel. I'm going to give you the reasons why HIMS was down today. Earlier pre-market, HIMS was like down 7 point something percent. Last time I checked, HIMS was down like 1.5%. I'm going to go over why HIMS was down. I'm going to give you a general thesis about HIMS. I'm going to shout out my channel members in just a moment, and I am going to do a little bit of technical analysis. I'm new to technical analysis, but I'm getting better every single day, and the only way you get better at something is if you try. And failing is okay. As long as you make mistakes and you learn from those mistakes, then you're a winner at the end. The reason I'm learning technical analysis is not to replace any of my other investing theses. It's actually Jesse Dow. I give him a lot of credit. He's in all of my comments. This guy has been an absolute killer when it comes to technical analysis, and he really made me a believer that there is something about technical analysis. So let's get right into the video, shall we? First of all, I want to give a huge shout out to my man Jimmer740, who's a channel member. Yesterday he said, great video, Adam. Can you make an update video on HIMS? And I said, I sure can. I have a play for the channel members coming up on earnings. That's one. And then I got a second request from my man Rich right here. Rich Webster, he says, Jesse, you and Ahmed have been helping me so much on increasing my productivity in the stock market. I wanted to say thank you first. So currently I own 0 crypto and I want to buy Bitcoin. What percentage do you feel is a great starting point to start a position? And then he says, I've also been looking at HIM's option leaps, was wondering if you have done some research on it, if it's worth getting into some leaps at this specific time. And then I told him, great question. I'll make a video for the group, and I'll put it out today or tomorrow. And I ended up making the first video, which is this crypto video. If you guys want to check out this crypto video, please feel free to become channel members down below. Now let's talk about HIMS and the price action of HIMS. So let's go over here first. So right now, HIMS is only down 0.35%. HIMS was down at one point today, 7% for the day, and now it's actually even. So it's actually breaking out. But if you look at HIMS in general, HIMS is actually down 4.5% for the week. Now it's down only 3.8%. It's down 6% for the month. Over 6 months, it's up 21%. The problem is it's up 21%, but it was up over like 100 something percent. Year to date, 30%, 1 year, 61%. At one point, it was up like 250% for 1 year. And the question is HIMS a buy? Should you buy HIMS? Well, I can't give you the actual answer, but let's talk a little bit about this. So if you look at this, This is the analyst rating, okay? So there's based on 9 analysts giving stock ratings to HIMS. There are 5 strong buys and there are 4 holds. No analyst is saying that you should sell. And this is the range of all the analysts. So every single analyst has HIMS between $10 and $18. Not a single analyst has HIMS at its current price of $8.70. So it's up to you what you want to do with this. There was a report that came out earlier today. I'm going to read you the report. I did not read it yet, but this is the reason why HIMS was down 7%. And then I'm going to give you guys some technical analysis. And then I'm going to give you some, train of thought of what I think is happening with HIMS. Spruce Point Capital Management announces investment opinion, releases a report and strong sell research opinion on HIMS and hers. And then they're saying that HIMS should see a 25 to 40% long-term downside risk. Okay. So they're not saying that there is going to be a downside. They're saying that there is risk to be a downside. Listen, at the end of the day, I'm going to read this with you. I briefly reviewed it and I don't agree with everything that they're saying. And these are their key points. They're providing evidence that HIMS operates on tenuous grounds related to corporate practices of medicine, regulations designed to minimize commercial conflicts of interest in the provisions of healthcare. Expresses concerns about the quality of healthcare providers by HIMS given the subjugation of the company's treatment model to its e-commerce revenue growth imperative and its weak customer data protection. It identifies serious operational risks related to several third-party pharmacy partners that have been a subject of the DEA investigation and FDA inspections for safety violations. That's a stupid one, and I'll tell you why. Questions that the company's sustainable advantage given its sales premium price generic products as more e-commerce players enter the market. Over-the-counter substitutes threaten its core sexual health franchise, and Spruce Points finds that customers can game the HIMS system. And now it says it's going to provide evidence that HIMS has failed to deliver on tutored new growth opportunities. And let's read the overview. HIMS and Hers is a health and wellness e-commerce company that came public in 2021 through a SPAC merger. The company provides online access to prescription and over-the-counter products, primarily for chronic conditions whose treatment is generally elective, not covered by insurance, and a source of social stigma. That's right, they take the taboo and they make the taboo or the unsexy sexy. The company's big win was capitalizing on the explosion of demand for generic versions of erectile dysfunction medicine, which is supplemented early on its men's hair loss treatments. HIMS and Hers has since expanded into dermatology, mental health, and women's health, sexual health. The company uses an affiliate telehealth operation staffed by contract physicians to provide patients consultants and issue prescriptions. And these are the concerns. HIMS and Hers physicians' operating structure and practices operate a tenuous grounds related to corporate practices of medicine provisions, findings of which HIMS and Hers disclosures could have a material adverse effect on business. Despite the company's claims of clinical excellence, we believe HIMS and Hers physicians' operations have been finely tuned to generate prescriptions in high volume rather than provide quality healthcare. We believe HIMS and Hers is exposed to material operational and reputational risks from third-party pharmacies that compromise nearly 50% of its current pharmaceutical supply chain. As a seller of commoditized prescriptions and over-the-counter treatments, HIMS and Hers has little substantial competitive advantage and is poorly positioned to face numerous competitive threats. We believe that most of the market expansion and opportunities pitched by HIMS and Hers has failed to materialize or have dim hopes going forward. We question the financial picture of HIMS and Hers paints for investors, and we believe numerous key business metrics are either problematic or indicate increasing financial pressure. We see a 25 to 40% downside risks on HIMS shares. All right, that's the report. Let me talk about the report now. Let me give you my thoughts. HIMS and Hers physician operating structure and practice operated 10 years ground. Disclosures that have a material of side work. So, matter of fact, I don't even need this report. Look, I'll explain to you. Several things. They're saying that they're worried more about giving prescriptions than they are of actual treatment. At the end of the day, the telehealth is an ends to the means, is a means to the end. Telehealth is the means, and the end is actually pushing products. The regrowth, hair growth, the erectile dysfunction, dermatology, and for women, similar, including contraceptive and stuff like that. The whole point of HIM's telehealth business is not a teledoc telehealth business. It's a telehealth business to push its e-commerce products. At the end of the day, that's what it is. In terms of their pharmaceutical chain that is, DEA scrutiny, I don't think that is anything to do with HIMS. Every product that they push is not under the scrutiny of the DEA. And as much as I don't like the CEO of the company, he even came out and said, listen, we're not pushing, narcotics types drugs like opioids and painkillers. We're pushing things that are under the purview, like that don't get evaluated by the DEA. And they're saying that they have yet to grow. They're not introducing any products to grow. That's not exactly true. They did introduce Hims Hard Mints, which is, getting a lot of trends if you go to Google Trends, which is essentially a pack of mints. Instead of taking a Viagra, you take a mint. That's one. They introduced a new dandruff shampoo. That's two. And they introduced a new product for women, if I'm not mistaken, as well. So that's three. They're saying that they don't have a competitive advantage. The competitive advantage is their stickiness and their marketing. So for every dollar Hims put into marketing, they make it back within 12 months, except for like paid sponsorships. So in less than 12 months, they make back their marketing budget for advertising, public relations, things like that. That's a huge number. 80% gross profit margins. And they have a 90 something percent, like 95% stickiness rate. What does that mean? For every 20 people that end up using Hims and they do a subscription or of anything, 19 out of 20 people, listen to the number I just said, 19 out of 20 people will end up staying and do a subscription-based renewal package with Hims. Also, they're saying that Hims is not going to offer new products. However, if you go to the Hims advisory board, which I showed you guys many times before, which I won't go over, there's huge heavy hitters. And what Hims does is they hire C-level executives and advisory board members that have specific experience in a specific medical field. They actually want to introduce some type of prescriptions, some type of products when it comes to weight loss. Now, that's going to be huge in the future. You can't just roll out a brand new product or a brand new chain of products for a brand new health treatment overnight. Yeah, it takes time. However, Hims is absolutely smashing it with earnings. Their revenue just keeps going up. So they raise the bar. Not only do they raise the bar, they end up smashing the raised bar, and then they raise the bar again for earnings, which I'll show you in just a moment. 4 out of the last 5 earnings, Hims absolutely destroyed earnings, and one of them they met expectations. So 4 out of 5 they beat expectations, 1 out of 5 they just met expectations. Now, of the 4 out of 5 that they beat expectations, 3 out of those 4 they absolutely skyrocketed, and once got them to the price of $12.50 last time. The last time they beat earnings, they didn't skyrocket, but nothing actually changed. As a matter of fact, they actually came in stronger than their revised guidance that raised their amount of revenue, which I'll show you in just a moment. Besides for a 95% stickiness rate, Hims is onboarding clients left and right. They currently have 1.2 million clients or subscribers or patients, whatever you want to call it. Their last quarter was their second strongest quarter, where they still brought in over 100,000 new subscribers. And remember, if you're a subscriber and you use one product, you're usually cross-selling and using a different product. That's the key to Hims, how they keep expanding their offerings. If you're using, for example, anti-hair loss shampoo, you're probably going to be using the conditioner as well, and you're probably going to be using the serum or the mousse, right? So I don't really agree with this article, and from the looks of it, it seems like the market doesn't agree. Pre-market, Hims was down 7%, and now Hims is up 1.4%. And I'm never going to bet against my team, but I actually wanted HIMS to go closer to that $8 mark, sub $8, which I'm not sure if it will because, man, it's absolutely rocking and rolling. Let me give you some technical analysis, but I just want to tell you that everything that they're saying in this article, I don't agree with. I'm going to look at it more in depth. I don't want to make it boring and spend 2 hours just reviewing the article with you, but I don't agree with this article, and I'm debunking a lot of things that they're saying, and it seems like the market agrees with me. Check this out. So this is HIMS right now. HIMS is currently up 2%. I hope you guys can see this on the screen really, really well. HIMS is currently up 2%. Earlier today, HIMS was actually at $8.44. They opened at $8.54, and now they're actually up 2.5% at $8.88. I'm not a pro at technical analysis, but I'm going to give it a try. Let me move this guy right here. Okay, so I made this chart when the price was still here. All right, it didn't open up yet. And there's a couple of really, really good bullish indicators that happened. So this is the support triangle right here, okay? Support triangle is somewhere right around this $8.35. And then you have this super support right here, which is right around this $8.05, which is our 200-day moving average. If we can break past the 940 mark and the 970 mark, this puts us past the 50-day moving average, and this puts us past the 100-day moving average, which is absolutely bullish. Currently, we're fighting right now at the 20-day moving average, and we're right on par of that. So this is going to be very, very important to see what's going to happen. However, just remember these key support levels. The first key support level is right around that $8.20, $8.30. A really, really key support level is that $8.05. A bullish level is right around when we get right in the middle of 940, 950, and above to 970. And if we can break that $10 mark, then it should be really, really smooth sailings to get right back up into this position right here. This is something that I was doing earlier today. This is something called the RSI. The yellow line right here is the RSI moving average, and the purple line over here is the actual current RSI. Now, RSI stands for Relative Strength Index. I drew this before earnings. I drew this before earnings on purpose. The Relative Strength Index has absolutely blew past this resistance line, which was very, very good. What does that mean? You want your purple line to be above your yellow line. In the morning when I was drawing this, the purple line was actually about to go lower than the yellow line, which was not good. So now this became bullish. In the morning, this was not bullish, but now it is bullish. Also, as I was talking, you see this line started moving up. This is very, very good. The RSI keeps going up. An RSI under 70 means that it's oversold. An RSI over 70 is overbought. So right now we're in a really, really good position, and it's actually starting to look more bullish. This is a presentation from HIMS. This is their last earnings, okay? Their subscription count from Q1 2022 to Q1 2023 went up 87%. Guys, that's huge, 87%. This is the magic number. Their revenue growth went up 88% year over year. Q1 2022, they were at 101 million, but now 190 million. If you go to revenue growth last year was almost at 100%. It was like 97%, something like this. It was absolutely freaking ridiculous. The funniest thing is their revenue growth was projected to be like 77%. They ended up coming in at 88% off the top of my head. Their adjusted EBITDA, they were not supposed to have positive adjusted EBITDA margins for another year. They ended up achieving this 4 quarters early, and they achieved this last earnings, not this earnings, or maybe even 2 earnings ago off the top of my head. They're absolutely freaking rocking and rolling, guys. Check this out. 90+% reoccurring revenue. This is what I was talking about, the stickiness rate. 75% plus gross margin profile. Their gross margin is actually at 80%. They want 75%. So the extra 5% that they're getting, they're going to put back into the company to appease and make customers happy, to expand their product lines and make their experience better. They literally said that in the earnings call, that even though we're getting 80% profit, we only want 75. So the other 5% they're going to put back into the business to give you a better customer experience. 1 year payback period. This is what I was talking about, that for every dollar that they spend in marketing, they get back in less than a year. These are freaking massive, massive numbers. Let me just show you one other thing. So these are the offerings that they have right now. ED, PE, STDs. They're also going to offer testosterone, prostate in the future, possibly for growth. For women's health, birth control, STDs, libido, they're going to offer menopause. They're going to offer digestion. For dermatology, they have hair loss, they have acne, they have aging. They're going to offer something for eczema and rosacea. I don't even know what this is. For mental health, they have anxiety, depression, in the future, insomnia, PTSD, substance abuse. Prospective markets, pain management, fertility, weight, cardio, diabetes. Does that look like a company that has no future growth? Does that look like a company that has a problem with revenue? Does that look like a company that has a problem with growth? No, it doesn't. Now, I could go over and over this, on and on and on, but this video is already 25 minutes before I edit it, and I don't want to bore you to death. To be honest with you, I am looking for a buying opportunity under $8. However, my position and your position is not the same. I've been buying him since $3, and I could patiently wait. Whether it hits $7 range or not, it doesn't matter for me. If I don't buy more, I'm okay with that. I am planning to make an options position play right around the earnings date, which I am going to be sharing with my channel members. Guys, at the end of the day, it seems like the entire market thinks this is bullshit because HIMS is now up 3.7% as I'm making this video. So from being down 7% pre-market to being absolutely killing it 3.7% up during market. And for the technical analysis, as I showed you, we have some bullish signals, some minor bullish signals. I do want HIMS to go up to that mid-9 target. So if HIMS can hit like $9.40, $9.50, that seems like a bullish signal that we're going to be crossing that $10 line. But so far, so good. HIMS is looking good and a really, really nice recovery. Now, I do have HIMS in my personal portfolio. I have HIMS in my daughter's portfolio. I have HIMS in my son's portfolio. I have leaps. I have short-term options. I am a very, very big believer and user of HIMS products, actually. Guys, thank you so much. Have a great day. I hope you liked this video. I hope it wasn't too long. And if you guys want to become channel members and figure out what's happening with my options plays, please, $3 a month. And my channel members get to ask me questions about stocks, real estate, crypto, and I'll make you guys specific videos. Just ask down below. My channel members, I think, are getting their $3 worth. And HIMS is actually up 4.3%. Thank you very much and have a great day.